Welcome back to Taking Stock. I'm speaking about media companies. My guest, Tuna Amobi, equity analyst with Standard & Poor's. Tuna, I beg your pardon, cut you off before. Give us a little bit more detail on Rock Band Gaming and how that helps or hurts Viacom.
Sure, Pim. As I was alluding to, I think Rock Band has emerged as the most recent breakout gaming franchise for Viacom. They're investing in the brand, extending it to international territories. I expect that it's over the next few years, it's going to become a major, significant driver to Viacom's bottom line. After I remember Guitar Hero, which I think also has done pretty well. So Viacom has taken out a pretty good claim in that casual gaming, and they continue to do that.
All right. Now you've got a $45 price target on Viacom right now?
That's correct. I think that was obviously before the most recent announcement. We will obviously revisit that, but right now we're still neutral on the overall outlook for the company. We think that the balance between the film and the advertising is, as well as the international restructuring at MTV, gives us some hope down the road.
All right, let's talk about the hope that CBS has for CNET. I want to first of all ask you, how are they going to pay for this and continue to pay the dividend?
Well, I tell you, I was actually scratching my head on that very question when the deal was announced. I put out a note saying that I didn't know how they were going to do that. It seemed to me that the premium was a little bit lofty. It seemed to me that the fit didn't appear as compelling as management had made it out to be. So overall, we think, though, it's consistent with the move by traditional media companies to bulk up on online and new media assets. But in this particular case, we're very skeptical about whether the deal would actually be accretive and how soon that might happen, given the guidance that CNET have provided to investors.
All right. Now, I want to talk about a company that you have a little bit more favorable view on. Let's talk about Disney, Bob Iger. We've got the studio. You've got the theme parks. A lot of people were talking about how the theme parks were going to be, in Wall Street's parlance, challenged because of high gasoline prices. It's not working out that way, is it?
That's absolutely correct. I think Disney has consistently, outperformed investors' expectations quarter after quarter after quarter. They seem to be defying, the conventional wisdom that the parks are pretty exposed to the slowdown in spending. So overall, I think they came in pretty strong, and not just the parks, but overall across the core businesses, ESPN, ABC. Consumer products. And then, importantly, they have these two mega franchises that really reverberating across the company, Hannah Montana and High School Musical. Much more upside left to come. So we believe Disney right now, a top pick in the media and entertainment space. Good things should continue to happen from here with the traffic at the parks still healthy based on what we know.
Let me ask you about some of the international moves they're making. Grey's Anatomy, Desperate Housewives, as well as Lost. They go into international syndication, I believe. Is that going to help the bottom line as well?
Well, that's already helping. That actually was a major factor in the most recent results. Among those three shows, I think management has guided that those three shows should contribute north of $1 billion to the company's overall operating income over the next 5 years. Those are pretty ambitious numbers. I think based on what we know so far, those shows continue to deliver, and much more upside to come on the international television licensing.
Tuna, what's the situation with Disney and Pixar right now? They're coming out with WALL-E, and also there's the Chronicles of Narnia, a sequel there. Is the relationship with Pixar, is that proving to be as amicable as many people would like it to be compared to what it was, let's say, under previous Eisner's reign?
Well, I think the key to making that relationship work thus far, and it has worked marvelously well, is the continuity of Pixar retaining its independence. Between Disney and Pixar, they just recently announced a slate of about 10 animated films to be released through the year 2010, including WALL-E, which you mentioned. So we believe that the animation side of Disney is going to remain a major, driver of the studio. If you look on the live action, side, Chronicles of Narnia, didn't really debut to I think it's fair to say that it's somewhat underperformed expectations, but we believe that, the studio is well run. It's going to definitely remain key to our overall outlook. There's a lot of other areas that the company can tap into to make up for that.
All right, and you've got a $45 price target on the shares of Disney. Is that correct, Tuna?
That's correct.
Okay. All right, Tuna Amobi, thank you very much for joining us from Standard & Poor's talking about media companies.